I want to make sure that anyone watches this video leaves this video with some new knowledge that will make them trade better, make more profits, make more gains. Now here are some key points that I will go through in this video, but I'll also provide like my overall thought process on trading and so on as we go. So really, if you have the time to trade, then you should really watch this entire video because there's gonna be a lot of good points. So here are some of the things we will actually talk about. For example, how I find projects, where I trade, how and when I trade, how I set stop losses, when I take profits and so on, and of course my overall thought process on trading and so on. I think I have a very different tactic compared to other people that just do technical analysis and so on. I do very little technical analysis, only in trend reversals, that's when I use it, but I don't play with technical analysis that much when doing the actual trade. There's a very big reason for it, and that's because when trading, you're doing PvP, or well, you're up against everyone else in the market, and if everyone else is using technical analysis, it's basically just gonna turn into gambling. I'm not saying that technical analysis does not work, but what I'm saying is that I use a different tactic, and sometimes I use technical analysis to enhance my decisions, to clarify some decisions so I can make the right decision. But usually I do more trend trading and smarter plays looking at the overall market and what is going on. But of course, I'll cover all of that in this video. So just sit back, relax, watch all of this, and you'll learn a lot. I have a long list of things, way more than what I mentioned here in the beginning. So let's just start with some of my key points of my overall thought process when it comes to trading. So the first point here is just make fewer trades. A lot of people I watch, a lot of people online, they make so many trades that they just end up getting a bunch of bad trades, and overall they put themselves in a downtrend. They expose themselves to market volatility way more than what they actually need. You don't have to expose yourself that much. You sit back, relax, you look at the market, you analyze the market, and then you put in a more researched trade that has a bigger chance of succeeding, because there is a very big difference between going at this with a 50-50 chance of it going up and down and a very structured strategy where you look at the market. You can wait multiple days, because once you make a trade, it's going to be a really good trade. So you don't have to put in trades every day. Just look at the market and only take trades that you're comfortable taking. You cannot take all trades. You cannot listen to FOMO. You cannot play around in the volatility. You only take the good trades. But of course, I'll talk more about what some actual good trades are. So my next point kind of just ties all of this together. And my point is simple. Never aim to day trade. You aim to make good trades, not just to make a bunch of trades or be a trader. You're here to make money. You don't care about making daily trades or anything like that. You look at the market when it feels right, when you have, well, I'll go through all of the points, but when it looks right according to the points and your own strategy, that's when you can actually make the trade. So next point here is use lower leverage. Personally, I usually play around with just 2x leverage, and there's a very good reason for it. And that's because I like to place my stop losses above resistance levels, meaning if it peaks, if something volatile happens in the market, I just don't get stopped out super easily. I have like basically the resistances are there to protect my stop loss. If you have 5x or 10x leverage, you will be very exposed to high volatility and you'll basically just be gambling. I have tried it out. It does not work. Most of the times I end up losing money. All of the times where I do good trades and play with lower leverage, I make money. I have a pretty good history on Twitter where I post some of my trades, but I'll go through more of that later. Next point here is just take obvious trades. I mean, this is pretty self-explanatory. It's not that complicated, but if something happens in the market that's just very obvious, will pump some projects, if you are there at the right time, you can take those trades. For example, Elon Musk posted a Pepe meme, so I went in and I longed Pepe. For some reason, I accidentally opened Twitter just when that happened, or well, you can have notifications on if you want to, but that's what happened. And so I ended up being there the exact second when I was supposed to long. You're up against bots and a lot of other people just sitting online 24/7 basically. So you need to make sure if you are late to the party, just skip it entirely, or you could even try and short it. But usually If I'm late, if I feel FOMO, I skip it entirely. But if I look at my phone and, oh, there's a tweet, then I go in and I just take the trade. And as soon as there's some profit, I just take my money, take my bag, and I leave, because those trades are usually very volatile. The key point here that I want to put out is that you need to be super duper early. We're talking minutes and seconds. Not that you look at a trade and half an hour later you try to long it, because then it's already too late. And it's okay, you don't have to spend your entire time tracking these things. But if you're just looking at Twitter or looking at anything like that, looking at the market, and something happens when you think, oh, this is pretty obvious, and you believe that you're actually first or really, really early, a couple of seconds, then feel free to take the trade. But if you're too late, half an hour or so, just ignore it, move on with your day. Don't spend any time looking at it. Don't even take up the graph and look at the project, because you will just feel FOMO and waste your time. My next point is I abuse downtrends. What do I mean with this? Most crypto projects, they peak, they're kind of like tech stocks and similar. They peak really, really hard if they are good. If they catch on, they peak really, really hard, and then they go down quite a bit, almost like the meme coins. But I abuse those downtrends as much as I can. Imagine just looking back a couple of years, most of the crypto projects in the top 100 positions, they're way, way down. Most of the projects don't survive. Probably like 99% of projects don't make it. So obviously, looking at that statistic, you should be shorting those projects, abusing the downtrend. But make sure you don't play with too much leverage. Make sure you don't jump in with a big short on a project that is actually still delivering. You can find projects out there. I'll have some good examples here soon in the video where I talk about some projects that, they've kind of stopped being alive. They've kind of stopped providing value, evolving, and so on. Those projects are doomed to fail, and that's all right, but we can use the downtrend through exchanges and similar and short it and make a bunch of money. Okay, next point, use stop losses above resistance levels. I mean, you can do whatever you want, but this is what I do. In the beginning, when I started trading, I tried to put my stop loss, like I only want to lose 10% or 20% and so on, and I tried to play around with that. But what I realized is that crypto is super volatile, meaning some random guy just wanted to pump it real quick before dumping it, kind of like cleaning out the shorts or cleaning out the longs. And I became a target for that because I didn't have a perfect stop loss strategy. So what I do now is I put not on the resistance level, because that's when they get you. You need to put it a little bit above. And basically what this means is that you cannot play around with too high leverage, because you will not be able to put your stop loss within a good percentage of, the loss that you would have if that stop loss was triggered. So playing with lower leverage will make sure that you can put it above the resistance level, or well, below the support level, making sure that the volatility of crypto does not get you all the time, because in reality, it's really easy to lose money in crypto and trading. It's harder to make money, so you gotta make sure you structure everything with statistics, numbers, testing, and make sure that you play the best trade that you can play using all the strategies that you have gathered over time. Okay, next point here. I wanted to mention a good example of a trade I did, or well, multiple trades that I did during the Pepe craze. I did not long Pepe. I did not ride it all the way up. I'm not gonna explain it too much here because I wanna focus on the trading aspect of this video. But basically, a lot of meme coins are out there. They get listed, some of them don't get listed, and pretty much 99% of them die out, and a big percentage of them actually is straight up rug. So you cannot gamble your money in all of these meme projects. I made another video talking about it where you can use exchanges kind of like a filter. You guys know I mentioned MEXC and Bybit and so on, how I use those exchanges to filter out basically meme coins and other projects, because those exchanges list those projects a bit earlier, but they also do some of the research to make sure that those projects don't rug. So that's kind of a filter I use. But basically what I wanted to talk about here is that when Pepe hits its peak, I did short Pepe, but I did some other really cool things. And that is that I looked at other similar Pepe related projects, because I know if you have Pepe and you do like a Pepe copy meme project that's a lot smaller community, they don't have the momentum and so on, you can actually short like the copycat project of Pepe. And that is basically what I did with Wojak. I have some pretty cool histories here on my Twitter. I just looked at what was going on in the market. I saw that Pepe was dipping, and so I made sure that I did not only short Pepe, but actually similar projects that was riding on the hype of Pepe Pepe. So look at projects that are copycat projects or that are connected in some way with the same meme. And I also make sure that those projects are not high utility projects because they might not dump in the same way. This is kind of funny. I also want to mention this. I wanted to make a trading challenge where I started off with $100 and I started trading with that just to prove to you guys that these strategies actually work and that I'm not selling you anything and all of that. So this is actually the first trade of that trading strategy. I put in $69. Kind of funny, but it's now up 88%. It's one of those classic trades, just shorting meme coins. Next point here is patience. You need a lot of patience. You need way more patience than you think, and you need to have time on your side. If I look at the market and the market is boring as hell, there are no easy trades going on, then what I do is I just don't look at the market and I go do other things. I go, build my companies. I go hang out with my friends. I go hang out with my family or anything like that. That's a lot better than looking at shitty graphs and shitty trades all day. So next point here is shorting low utility projects. It's very simple. This is straight from personal experience. If you look at two projects, one with no utility, one with a lot of utility, both look like they're about to dip. You short the one with no utilities or you go for the ones with no utilities. There's a very big reason for it, and that's when projects with high utility that could have a place in the market, when they dip, people are sitting there ready to buy that dip. But when a project with no utility dips, everyone is sitting there getting, pure panic, and they're gonna dump the dip. So if a project with no utility dips, it's gonna dip even lower. But a project with a bunch of utility, if it dips, people are gonna see it as an opportunity to buy in at a lower price. Straight to the point, no utility, easier to short. A bunch of utility, people will be looking at the dip as an opportunity to buy, and they could flush you out of that trade. Now I know this is a lot of points, but I think this is gonna be a pretty good video with a lot of value. So feel free to put it in the background or whatever and just listen to what I'm talking about. Next point here is that you can short copy paste projects. As stated before, you have Pepe, you have Wojak and other similar memes that ride off the hype of Pepe. When Pepe dips, you short the other projects. There's a lot of other similar things like this. You have copy paste projects of blockchains and similar. When one rides from another, you just short the one that's having the free lift up because they will fall really, really far, really, really fast. And when they have no utility, it's just a free fall to zero basically. Wojak, a pretty cool example like that. As I showed you here, my trade, I can zoom out here a little bit. You can see it just free fall all the way down. People try to pump it back up, but it keeps on dropping. I'm just gonna hold this short for as long as I can and make as much money. Maybe we can even double our money in just one low leverage trade. That is pretty damn cool. Okay, moving on to some more practical questions. How do I find projects? I've talked about this in previous videos, but I look at projects that actually get listed on exchanges. Usually I do this on MEXC because they list a lot more projects, and of course Bybit as well. If you follow Binance and similar, it's probably gonna be too late to find those really good opportunities to long or short. So I look at MEXC or Bybit, pretty straightforward. But other than that, I look more at opportunities than the specific projects themselves. So I don't FOMO into projects. I look at trends and then I look at things connected to that trend. So if Pepe is the trend, I don't trade Pepe that much specifically, but I look at things connected to Pepe. Next question, where do I actually trade? I trade on MEXC and Bybit. They're also providing a lot of opportunities for my channel and for this community specifically. So that is of course one of the reasons why I use them. But basically they have like sign up bonuses and deposit bonuses and so on. I have a lot of friends in places where they don't make a lot of money, and getting those like $20, $40 sign up bonuses and so on to start trading is a big deal because that could be like a year of saving for them because all of their money is going to food and rent and so on. Now you might look at that because you live in a place where you make $1,000, $2,000, $3,000 a month or even more. But there are people out there living on $30 per month. I know some of those people personally, and they do appreciate when I put links down below and similar with opportunities where you can basically just get free money. But of course you can trade anywhere you like. What really matters is the quality of your trades. There's one example here that I think is pretty cool. PalmSwap, they're making a decentralized, or well, fully decentralized trading platform where you can trade on chain. I think that's really cool. It's a place where I will be trading, but I'll talk more about that in different videos. Next question here, when do I trade? This is pretty simple as well. I trade when I have the upper hand. I do not put in a trade when I'm about to go to sleep. I don't want that stress in my life. I put a trade when I have a good opportunity, and that trade will also be a lot lower stress if I put in a trade when I have the chance. I'm not putting in a trade when I'm in the car going somewhere. I don't put a trade when I'm over at friends or family. When I have the time, when I have the opportunity, when I'm not building, when I'm sitting down and I see, wow, this is a perfect trade. It's looking good. This is happening. This is probably going to go well. There's a good resistance level. I can put in a stop loss right there. And I can feel that this is a pretty safe trade. And that's when I put in the trade. And after I put in the trade, I just leave. I go away and I do something else. I keep making money other places, and that's what I do. How do I set stop losses? We talked about it before, but above resistance levels or below support levels to make sure I don't fall out of the trade due to high volatility. Now, this one is a bit trickier. When do I actually take profits? It can depend. So for example, on the meme coins here, like the Wojak trade that I have going on right here, I'm actually just waiting for it to fall like forever, basically. So I'm gonna wait and wait and wait, and I'm gonna move my stop loss down. If it gets triggered, it's just, I still make money, but I'm just waiting for those trades to accumulate as much profit as possible. But if I feel like there's some technical analysis going on of a reversal, I look at it and I'm like, this might reverse. I just take the money. I take the bag and I get out. You see on my Twitter, there are some pretty cool trades like 300% and so on. But there's also a bunch of like 10% trades and similar. 10%, it's a lot of money. If you were to put it into the general market, getting like 8% returns minus inflation, like more like 5% returns per year. So if you can put in one trade that gets 10% in 1 year, that is more than the general market overall, like the S&P 500 and so gets over an entire year. So you gotta put it into perspective. 10%, it's a lot when you have a lot of money, and 10% with less money will grow into a lot of money really, really fast with fewer trades. Even if you put one trade a week, that's 52 trades a year. 10% per trade or similar, it's gonna be a lot of money. Okay, I just wanted to end this video with some overall thinking here. I know a lot of people, I see Twitter accounts with like 400, 500,000 followers, and these are Twitter accounts. They're farming their followers for money, using their followers to affect markets, getting like sponsorships, like they're getting paid to promote shit. So personally, I only listen to myself. Like, I've been in this market, I've been here for such a long time. I know that if I listen to anyone else, most likely they're out to get my money. There are some good people out there. There are some good YouTube channels out there, but there are so many bad YouTube channels out there and so many bad actors like in Twitter, in this space, especially now in the bear market. In the bull market, I believe it's a little bit different, but there are so many bad actors out there. They're farming content, farming you. Like, everyone watching, they feel like they're like a bunch of sheep and they're just farming you for constant profits, affecting the markets, affecting smaller projects, like selling you products, selling you courses and so on. I'm not here to do that, so I only listen to myself. Really, the only thing that matters here is that I can make good trades, make quality trades, and make money for myself. I know making this video is kind of, the opposite. I'm helping other people. I'm trying to provide as much value as I can, but I'm looking at the crypto space right now and it's just hurting. It's hurting my soul. There are so many people just being farmed out. Like, they get in the crypto space and they just have all of their money extracted from them. Some guy from Twitter, some YouTuber, just all of the money is just being extracted and they're going to end up hating crypto. Crypto is a really, really good thing for us, for freedom and for the future. Now, I want to add one more thing here before I wrap this video up, and that is that we're waiting for an overall uptrend in the market. That's going to put trading into easy mode when it comes to longing. Right now, we're kind of, high volatility. We don't really know what's going on in the market. It's all a big gamble. You can still play it really smart and make some money, the whole Pepper situation, shorting all of that and so on. But when the market goes into full bull market, take that opportunity and make some easy money. But you can learn to trade in all markets, take all opportunities and constantly keep doing good trades and make money. But once again, That's what I do. I just listen to myself, my own strategy, and I follow that. That's gonna wrap this video up. I hope you guys enjoyed this, a little bit longer video, just going through a bunch of points. If you have more questions, feel free to put them in the comments down below. I'm gonna try and answer them in another video like this here coming up soon. Thank you guys so much for watching. Good luck trading. Hope you guys make massive gains, and I'll see you guys next time.